There we go.
All right, everybody. Just want to welcome everyone tonight. We got an exciting some free education from Frank LaMark. We got Tiffany and Lupe here also. And I am Marco Barbaro. I'm going to do a quick 2-minute intro because hopefully most of you have heard about me, but if not, I'll give my websites. I'm not going to share my screen. I had the resume page up. I'm just going to tell you about me. One of the leaders of MIH Mastermind. I have about 160 plus members and students in there. I own currently about 39 multifamily properties. And one thing I'm going to talk about tonight is diversification. There you go, man. I didn't know you had that up there. Diversification. That's why I'm here and what we do in the mastermind. So I'll get into that. Over 3,000 units. Um, uh, and I was from New York. I used to be a former chef and I moved out to Florida. So long story short, I'm multifamily driven. And let me get into my mastermind. So Frank and me met, and Lupe also. Frank joined my mastermind about a year and a half ago, I think. Frank, is that correct? Maybe more now.
Other than that, almost 3 years now, believe it or not.
Is it really? That's right. It was during COVID. And yeah, Frank came in and he was always doing well. He's always successful. He'll go into it. But being in a mastermind is the power of proximity. And within my group, he joined for multifamily. So we were a multifamily driven mastermind. The 2020, I taught protecting your family during COVID. 2021 was proper diversification. 2022 and 23 is all in. We are all in. There's like type of mantras that we're teaching and learning. So in 2021, the reason we did proper diversification, because there are shiny objects and we teach that. And what we have now is we have a crypto chat and a crypto group in the mastermind. It's not just multifamily. We have a health and wealth chat and health and wealth group constantly putting stuff up that I have here, that all the teas and everything that we're doing, which is awesome because you want to be healthy in life. You just don't want to close deals, and we incorporate everything in life. And one other thing that got started like organically because it became very popular was short-term rentals. And all of a sudden, Valerie, Cameron, Frank, and a whole bunch of other people within our mastermind started a short-term rental Facebook page, chat, and like group. And ever since then, it's really they've had amazing speakers on. And Frank's been closing deals. It's unbelievable. He's going to go into what he's closed. It's really unbelievable. And it's a mix of like a multifamily and short-term rentals. And he's really going to be doing both. So the shiny object I want to talk about what's proper diversification. Proper diversification is not Marco, the multifamily guy, going out and saying, you know what, I'm going to do short-term rentals next month. That's not proper. Obviously, we teach student for life. I should get educated. But in my group, how did I invest in a short-term rental? I invested with Frank. I would invest somebody in my group who's doing it. I'll give another example. Abraham Anderson is a master at mobile home parks. He's like 28 or 29 now. I'm partners with him in 2 deals. He owns over 2,000 mobile home parks. He made top 100 mobile home park owner on one of those magazines. What did I do? I love mobile home parks. There's a higher risk factor with mobile home parks. I'm not educated in the space. Is it similar to multifamily? Yes, but I'm not a master in it like I am multifamily. And I got into 2 deals, proper diversification. I partnered with Abraham on those deals. So same thing with the short-term rental with Frank. It's not a space I'm in, but I would like to get into it. So I did a couple deals with Frank because I want to have 2 in my portfolio besides the 38, 39 multifamily I currently have, because I like diversification in some stock. I do very little stocks, crypto, mostly multifamily, and now a couple short-term rentals. And if I learn the space, I will get into the space more. But I told Frank I need to learn it besides just investing with him, and I will invest alongside him. And then as I learn it, then I can jump even further into the space. And our group and chat is a place to learn. So getting into that, 2 last things I want to mention, and then I'm going to hand it over to Frank and the team, is we are doing a multifamily meetup September 17th in New York City with Nico Salgado and Joseph Lee, MIH Mastermind members, and Joseph is my partner. It's going to be me, Chris Jackson, and Joe speaking in New York. If you guys want, I'm going to put my information in the chat. I'll put my cell phone number. Whoever is on here that's new can text me. I'll jump on a networking call. If you're in New York, you do not want to miss this. It's going to be multifamily. There'll be short-term rentals. It's a little bit of everything. It's like-minded people. And Chris Jackson is also doing in October. If you want to text me, he's doing an underwriting course in a recession. It's going to be a 3-hour course. It's on in October. I'll give the date. It's on a Wednesday night from like 7 to 10. And if you're interested in that, it's perfect timing because everybody's been asking for that. So what is Chris Jackson, the creator of Synthesis, doing? He's doing the course. So in saying this, let me hand it over to Frank because I don't want to waste any more time because I know he's probably got a great presentation for you guys. But
Thanks.
Frank, go ahead, take it away, man.
Absolutely. As soon as I get to the next screen. There we go. So I'm Frank. I invited you to this webinar. I want to thank you for coming first and foremost. Marco, my partner, met him about 3 years ago as well. And he's been exploding with his mastermind. And there was only 4 people that got started. Was Bailey, Chris, myself, Fernando, and Anna were one of our first groups. And ever since then, my limited belief on raising capital, on partnering went out the window. So I can't thank Marco enough and coming and spending his night introducing us and being on this chat.
So one thing, Frank, I want to tell you. So one thing, like talking about that, crushing limiting beliefs, Frank joined and like he was always doing a lot. When you're not in these groups, he believes in masterminds. That's why he joined. You're doing it on your own, but I gotta give him a lot of credit. He joined and he never raised before. He never had to. He was doing the deals all by himself. But he saw what we're doing. He's like, you know what? I can bring in partners. And what'd you raise, Frank? About $7 million last year, or 9 or?
Yeah, actually, that's what I was going to get to is before that, I literally didn't. Let me go back here. Sorry about that. I didn't raise any money whatsoever. I used my own credit, raised my own money. I had my own money, and I did like 1 property, 2 properties a year. A very slow pace. Still doing well. Don't get me wrong. Flipping a house here and there, picking up a long-term acquisition, a short-term rental here. But then once you actually learn the power of partnerships, raising capital, expanding horizons, and that's why I kind of got into the short-term rental and actually raising capital on my own, right, with creative financing and dealing with sellers. So I'll get to all that fun stuff later. But myself, I started, 20 years ago at 19 when I started selling cars. And fast forward, I kind of got into the cabinetry business, importing cabinetry. After 9/11, that industry kind of took a dive. So I pivoted, right? I had to reinvent myself. And I got into selling cabinetry to Wayfair and Walmart. From there, I learned all my sales aspects, how to sell, how to do marketing. And I basically then pivoted to real estate agent full-time. Since 2007, I've been doing it. And my strong suits is 95% of my deals are seller financing, or I use the seller as a bank with creative financing. That's why you guys are here, is kind of learn how I'm doing that. And literally, when I was on the phone, I contracted a seller on an island over here in Johnsburg, which is awesome. Who could buy an island on creative financing, right? You just kind of fall into these things. But yeah, I got a small portfolio, single family homes, about 36. I got 9 large venues. I'm sitting in here now in the Johnsburg estate, one of our very first ones that sleeps over 20 some people, rents for over $2,300 a night. And we're just crushing it. And I'll get to that. It's one of my first case studies. I have 5 case studies we're going to talk about, plus a bonus one I threw them at the end. And we're going to talk about some deals we have under contract. But enough about me. I'll let you, Lupe, talk about yourself.
Hi, welcome everyone. My name is Lupe Chow. And as you can see, my husband and I are both serving the military. We are on active duty. However, we are also investing in real estate to build our wealth and financial future. I joined the MIH Mastermind about over a year ago now, and this is where I met Marco, I met Frank, and from there, so many doors opened. I have done 4 deals with Frank and really grow my network and ability to close deals and networking with people, connect with other investors. So I just want to say, sometimes you can still have a career you love and do that, or whatever your passion is, but always think about building wealth and building your financial future. So really happy to be here and have this opportunity to share my experience. Thank you for this opportunity, Marco and Frank.
Thanks, Lupe. Tiffany, you're up.
Hi, everyone. Thank you so much for joining. I partner alongside Lupe and Frank on the short-term rental business. And one thing that I do want to echo is what Marco said about the power of proximity. I met Lupe through the Real Estate Invest Hers for the Capital Region here in Maryland. And once we met, it was an organic connection where it was organic for us to partner. She introduced me to Frank, and the next thing you know, we've done 4 deals and 2.1 million in the last 3 months in short-term rentals. So Frank knows what he's doing. And I also want to highlight what Marco said, the power of diversity. My specialty is multifamily, but I'm learning alongside of Frank, and I'm investing alongside of Frank. And what he's going to teach us tonight is clearly working. And it's just amazing what he's doing. And I'm very grateful to have you guys on my team and for everyone joining tonight. I'll hand it back over to you.
Thanks, Tiff. So where do all these case studies take place? Well, I grew up in Chicago. This is about 45 minutes north. It's called the Chain of Lakes. It's on the border of Wisconsin and Illinois. Consists of 15 lakes. 4, I believe, and don't quote me, are naturally made. I want to say it's Pistaki Lake, Lake Marie, and Fox Lake, and there's one small one, like Bluff Lake. The rest of them were actually flooded by the Army Corps of Engineers in the 1920s, making this a huge tourism for people coming from Chicago and Milwaukee. It just flooded the area with lots of bed and breakfast, motels, casino. This is during the age of Prohibition. So it's been rumored Al Capone used to hang out here all the time, and a lot of the gangsters from Chicago, and that's probably absolutely true. It echoes it today, and there's a huge amount of what I call it, it's just exploding with development, just tons of it, and that's why I'm seeing a lot of opportunities when it comes to short-term rentals and people come back to this area. So what do you guys really want to know when you're onto this call is how to get direct to seller, right? How to find properties. And that's the number one thing I kind of teach people. And I do a little bit of consulting, and people ask me, want to pick my brain every day is how do you get all these deals? Like literally I'm closing 3 to 4 deals a month, closing them, right? Not just contracting them, but closing them. I'm looking for pain or urgency that these people are actually have, right? So it doesn't matter if it's a multi-unit building, a mixed unit building, a bar, a commercial storage space. I'm looking for what pain is coming across my desk and how I could solve their problem. And that's what makes a good salesperson, is be able to be a win-win situation and helping people get them out of that situation. It could be health, it could be divorce, it could be they're being incarcerated, right? Relocation for their job. I go on and on what the pain points are, but that's the number one thing you have to really focus on, is finding the pain and how to help people out. So that comes to our first case study. I'm sitting here now in the Johnsburg estate. About a couple of years ago, we actually found this property by a texting campaign. One of my favorites is 100 days or older MLS age listing. So there's a reason why they're sitting on the market for so long, right? And if you're a realtor, you'll know this is either overpriced by the seller telling the realtor, hey, I'm stuck on this number, I'm not moving, or they're upside down on the property, right? And they have to hit that number. The only third other way is if it needs more work, right? Then actually they could afford to do. So they have to hit that number, they're going to be upside down. So I like texting, I like cold calling, and I like driving for dollars. Those are my 3 kind of target ways I'm looking for property. I kind of put this exact transcription of what came through. You can read it on the screen, but basically I make my text short and simple, not overcomplicated, very cut to the point. I want to buy your property. Are we a good fit? This is Terry. Terry was a seller. And I do corny pictures like this because it's real. These are real interactions. It's very difficult. I'm not saying it's impossible to do this stuff virtually. You need to be on the ground, meeting these people, contracting them, shaking their hand. It's all about trust. And when you're doing seller financing, you're married to these people. If you have a 5-year or a 25-year articles for agreement of deed, it has to be from the beginning a win-win. There should be no animosity, and we're helping each other out in the transaction. So what I always do is I always give people 2 offers. I tell them, listen, I could give you a cash offer, but it commands a cash discount. Chances are we won't be friends anymore. Ha, ha, ha. My whole idea when I give them a cash offer is I don't want to give any cash or little money out of my pocket as possible, because that's what boosts your cash on cash return, right? So I want to get rid of that cash offer by disqualifying and say, but I could offer you an offer on terms. And 99% of people say, what's terms? And then I go through my terms sales pitch. There's numerous ways of doing it, but I use Pace Morby's F-150 story, where basically he talks about an F-150 He couldn't sell it at his price, but he split it up into payments and people ended up wanting to buy it even at a higher number. So this is how this deal broke down. We did an articles for agreement of deed, it's called, on a purchase price of $779. And you could look up this address, 1104 Bay Road in Johnsburg. On Zillow, it's worth 1.3 million 2 years later. The power of inflation, right? Will it come down? Who knows? If it comes down 20%, we're still up, right? We put $100,000 down on a 5-year term at a 3% rate. It balloons after 5 years. So I'm not a, an economic genius here, but chances are we're going to be okay refinancing this property, right? With the amount of money that it's been going up with inflation. Our monthly payments are $52.97. That's P&I, insurance, and taxes. I got a 30-day no payments. So I try and do that with all of them. It gives us enough time to remodel the property, get it stabilized, get it up in our Airbnb listings, and kind of go from there. The remodel plan, it was a lot of cosmetic stuff, right? A lot of plumbing, old plumbing, electric. We had to make sure electric was safe first and foremost. And we turned this old tennis court into a basketball, NBA style type basketball that do a lot of the guests love it. Absolutely. That's what actually attracts them. That's the wow factor on Airbnb. And you have to differentiate yourself from other competition out there, right? What makes us different? Amenities, right? Volleyball courts, pits, basketball, you name it. We have boat rentals on the property, which is huge, that are specific, exclusive to our guests that come over. We did all this in 4 weeks too, 100,000 remodel, including a roof, basketball court, furnishing the property, you name it. We initially underwrote for $1,300 a night. We want to be super conservative, considering that this is one of our first properties that we did large scale anyways. I've had a lot of other ones that are 3-bed, 1-baths that I've done, but nothing at this scale. And
Oh, he's coming back in.
did I lose you?
Yeah, you're back in now.
Okay. Where did you lose me here?
At the tennis court or basketball court.
Okay.
It's all right. Take your time, get back on.
Sorry about that, guys. Can everyone see me?
Yeah.
Okay. Basketball court. Let me go back here. This is where you lost me. Basically, we did this in 4 weeks. I gave ourselves a couple months to actually get this done and stabilized. And then to the numbers where we underwrote it very conservative at $1,300 a night. We're now at right around $2,300 a night, way more than we anticipated with the demand. And I think COVID and people being away from their families really brought them together in these large format houses. We underwrote it for 130, and it's actually going to probably produce a little over 200. That's what we're on pace for. We underwrote it for 9% cash on cash, respectfully, and we're well over 22. Once we refinance this, this is definitely going to be an infinite return type deal. On to case number 2, I'm going to go a little fast through these. So if any time we'll answer a bunch of questions at the end. There is 5, 6 of these. Plus, we're going to share some new deals under contract. So there will be a recording as well, so we can talk about it later. This was an interesting one. This one came from a wholesaler that I knew, and the seller was in a sticky situation where he demoed the house and couldn't afford to put it back together. He's a restaurateur, and in COVID, he had to actually shut it down. He has, with all the lack of income coming in, he has this house that's ripped apart, and he couldn't sell it now. So he needed help, right? He had a problem, he had an urgency that we had to solve. So I acquired this on a land contract. It's in Wisconsin, so they don't allow articles for deed, but they do allow a land contract. Purchased it for $147. The house wasn't worth $147, but put back together, you could look on Zillow. It's 812 Center Street in Lake Geneva. It's well worth in the 300s. We put about 40 grand into the place. It's a 5-year term, and his payment is a little over $1,100 a month, including taxes. And we had to do everything. It was gut to the studs, back together with electric. The ARV is more than 250. I think it's closer to 300 now. I did this about a month ago, so that's how fast these things are going up. The answer is cash flow, right? Why would anyone in the right mind buy something like this? And it's because their cash flow is insane. It's going to be an infinite return deal once we go to refinance it. And again, I don't feel that we're not going to get this place refinanced based on the income coming in. I think we're on year 2 with this property. This is the second floor here. First floor was here. This is what it looks like now. Pretty cool property. Here's how the numbers kind of broke down. I'm not going to bore you with all the numbers. You guys probably want to know how in the world I'm just getting these places contracted. Getting all the, the tools, tips, tricks, having launch control, having Podio for your CRM, having VAs help you with all this stuff. That's great and all. You really have to close people. Be a people person, learn how to structure the deal on the fly. And I'll go through some of my purchase strategies that I kind of talk about. But majority of them are cash, articles for agreement of deed, subject to mortgage, conventional financing, and that's about it. So as I'm talking to the people, and this is the Roxana Resort, this is the number 2. So I'm just moving my screen here. Their pain is their family home had to been, they had it for years, and due to health issues in their family, they needed to downsize. So the owners listed the property with a realtor, and the realtor priced it a little bit too high. It was when the start of COVID where all the prices started to go up. He was marketing it as a single family residence. The problem was this is a big property and it's a bed and breakfast. It should have been marketed as a motel or whatnot, in my opinion. Now, of course, there's a lot of other naysayers, but that's what we turned it into, is back to a short-term rental. Short-term rental is just a marketing strategy, right? Back in the 20s, it was a bed and breakfast. So there's nothing different from 120 years ago. It's just the way we market it differently with the power of the internet, right? So they didn't receive any realistic offers, and the realtor reached back out to me and says, listen, we want to put the deal together. I said from the beginning, the house is worth 800 as is, with no income coming in. So who in the world is going to get a loan on a commercial loan and something like this? So we acquired the property at 800, price was 950. It's a beautiful, in the 1893, one of the only last standing properties in the chain of lakes that's a bed and breakfast from those days. A lot of them burnt down because they're all wood structures. It is zoned commercial. It fit in perfectly. So I knew when I saw it, it fit in perfect with our portfolio and the partners that I work with, that we couldn't pass something like this up. We have done quite a few weddings there, corporate events, women's retreats, you name it. I mean, people come and they flock to this area, and we do a lot of advertising on the Wire, on the Knot, Airbnb, VRBO, Booking.com. We just hooked back up with SiteMinder is another distribution platform that we use for properties like this. That's going to go to your Google. When you type in like Fox Lake motels, it's going to pop up on there. Here's how the returns break down. We bought this cash, we plan on refinancing it in probably year 2 or year 3, once rates get a little bit better. But we're expected to do, even with different outbreaks in COVID, between 130 to 160 in income realistically, and we're on pace for that. We get some spurts, right, where we're going to get large families coming in there for $17,000 a week, and then we'll be quiet during the week, because now it's coming up to Labor Day. So we're changing our strategies with pricing all the time. We're constantly moving levers to see what works, what doesn't. And that you have to in this. I don't care how good you are, how experienced you are, it's ever changing, it's very dynamic. Next case study is number 4. This is Lakeview Place. This is an 8-unit motel and bar mixed unit. This is the tired landlord. He had the property for 30 years. His name is Richard. He basically had it, he inherited from his mother. They have a bunch of restaurants and bars all around the chain of lakes. He's just getting tired of dealing with the tenants, tired of running the bar. He wanted to get out. He's had it on and off the market for 5 years, and the condition that it was in was pretty bad. They had some really bad tenants in there that were paying $400 to $500 a month and constantly making a ruckus that I had to help this guy out. So it was a big win-win. I looked for more partners into this deal. It wasn't a spectacular deal on the surface, but I structured it as an articles for agreement of deed for no balloon. It was 30 years, I believe, at a 5% rate. I think we put $100,000 down and put about $100,000 to $110,000 into the remodel. So, like I said, our original plan was 1 to 3 years. We're going to turn the bar in the bar rental in the motel and leave it as is. And then by year 3, the existing bar lease was going to be up. We were going to convert the bar into a living space, configure the upstairs and the hotels and cottages. But after dealing with these tenants, it was just overwhelming where we weren't really making any money. We're breaking even. We decided to, okay, let's make the move. Let's turn this place around. We had to remove all the tenants, probably 16 some tenants, relocate them to other places. I helped out quite a bit at relocating them and completely turning it around cosmetically. Structurally, it was awesome. Richard did a great job with structural foundation issues, plumbing, a new well, the septic was up. I mean, everything was really done. It was just on the surface. Really what mattered was that. So here's the before and afters. This is the cottages that are to the left of the bar and the units above it. Air conditioning we put in, a lot of electrical was miswired. We had to get that corrected. And so it was safe first and foremost. So our income, it was losing about $3,500 a year and projected 1 year to 1.3. Now we're at an occupancy rate of 70%, which isn't too bad for the first couple months. Our first month we pulled in about 15 grand. So I was pretty excited about that. And this is the interior, what it looks like. And one unit is unit 7. Here's the numbers. Like I said, year 1 and 2, we were losing money. And then this is our projections. We're probably going to do between 20 to 30% cash on cash. Once we are still playing around with the numbers, and the cleaning, believe it or not, is one of our biggest hurdles, is cleaning efficiently, but cost effectively in linens. So I know some people that they own short-term rentals, they end up buying laundromats, because if anyone is into the hospitality industry, your laundry is insane. So this is case study number 5. This is a recent one that I just found in Lake Geneva, Wisconsin, if everyone's familiar with that. This is a smaller lake called Lake Como. It's a subject to mortgage. So I've done a handful of them. There has to really be a perfect storm with subject to mortgage deals. There has to be no equity or low equity. There has to be pain on why the seller wants to actually do something like that. Like, why would anybody deed a house over to me, right? Without even knowing me. It's like a magic trick, right? But it has to have a perfect scenario of all these different things to make it come together. This gentleman had a VA loan, which was awesome, but he just refinanced it and stripped all of his equity, but 30 grand of it. It's at a 2.5% rate. But once I get to the numbers, you're going to see why I did something like this. This is Fred. Fred, his pain was that he wanted bad memories out of this house. He recently got divorced for the 3rd time at age 70, but then he remarried. Good for Fred. I thought it was awesome. He's a super great character, this guy. He's like, I met him on a Friday. Saturday, I'm sorry, I talked to him on Friday. Saturday, I went over. Sunday, we signed a contract. He was going to put the house on the market on Monday. The numbers made absolutely perfect sense. So basically bought the house for 30 grand. With a subject to mortgage, you quit claim the deed into a land trust. Typically in Wisconsin, the laws are they don't even recognize land trust, okay, or any type of trust, as a matter of fact, with their laws. Very odd. I didn't know that because I've never done one in Wisconsin before. But what we did is we actually quit claimed it over with Delaware Corporation. To if the deed was called, or if the mortgage did call the loan, they'd say, oh, this is mostly for asset protection. So I'll get to that later on what the some of the objections I get from sellers and how I kind of overcome them. I think that's real important to talk about. So basically we bought a house for 30 grand, right? It needed cosmetic stuff, but we then deeded the property over to an LLC. I get all of his banking information. I make the payments directly to his bank. So really the transaction was 7 days. We made the turnaround as soon as we got clear title. Don't know why my picture didn't show up here, but oh, there it is. Hey, that's me. It looks like me. Anyways, we took over the mortgage for $189,000. It was a VA mortgage with $30,000 down. I'm gonna base my numbers based on the other 2 Lake Geneva properties we have. I think this is super conservative, between 30 and 40 grand. The expenses are 17, and the debt is 89. So not even refinancing this property, you're at a 26% return. Pretty cool for $30,000 out of pocket. It'll basically pay ourselves back within the first couple of years. This is what it looks like with a new fresh coat of paint. Changed it up a little bit, made it fresh. Again, just kind of takeaways direct to the seller. You never know till you ask, would you do something like this? And that where comes talks about your limited beliefs, right? On you don't think you could really do it, just ask, right? And you might actually get a date out of it. So this one has to be perfect, unique storm, low to no equity. So when you're doing your searches, if you're familiar with PropStream or CoStar or something, you want to look for the pain, right? The low to no equity and why they want to leave the property. So I'll get to the next one, but this is going to be the bonus one. This is not a short-term rental. This was just a single family home. And believe it or not, I pick up more of these single family 3-bed, 1-baths a month. I'm on pace to do 2 a month with very little money out of pocket. And I'll show you this. This couple was awesome. He was actually a Navy SEAL. They lived in Ingleside, Illinois. And there's a naval base up in the Great Lakes where he was in there for training. The SEALs actually trained there. He got orders to be deployed over to Afghanistan. They just bought this house a year ago and it was at break even. So he had have to come out of pocket for realtor costs, closing costs, law attorney fees, you name it, tax credit. So he basically had to come out of pocket a good 15 grand. They tried to put on the MLS and it failed in 160 days because they were stuck at their number, right? Like I talked about, look for aged listings that are failing because that's going to show some sort of pain. Again, a really simple text, nothing complicated. My whole idea is to get them off the text, get them onto a phone call. And it's not about building rapport. That's another big misconception people have. It's really about the numbers. They had pain. How can I solve it? So I'm pretty straight to the point. And I close these people with less than a week. You can see this kitchen, it needs absolutely nothing. It was move-in condition. They had the place cleaned out and moved within 3 days because they literally had to leave. So this one was in Illinois. We did quit claim it to a trust we set up. We controlled the entire property. We buy, sell, trade this thing any way we want. Just again, took over the mortgage, make the payments directly to the mortgage company. And we've had great tenants in there for the past, I think almost 2 years now. It's a win-win. They were upside down. They literally going to put the keys in the mailbox and walk away because they did not want to be out-of-state landlords. Here's how the numbers came down. Literally, all we did was quit claim it. So a title fee, a realtor fee, with very little money out of pocket. I think it was $800 out of pocket. Our mortgage payment's $1,100. Rental rate's $1,885. For as long as we own this place, it's $741 a month. And we didn't even paint the place. Just some touch-up paint was needed. They kept very good care of the property. So takeaways on the whole kind of talk here is direct to sellers. Be patient and consistent. It's just like working out or dieting. You have to do this every day for 1 to 4 hours. Look for the pain or urgency. Do not look for properties. Do not look for a multifamily 3-bed residential property, or a lot of people are stuck in, I'm looking for a multifamily in the Bronx, in the zip code, on this block. You're never going to get it, right? You need to basically be open to all asset classes, and the ones that you don't want, pitch off to your partners, wholesale the deal. But you have to understand that when these properties come across my desk, I look for the pain or urgency. I'm not looking for that specific property, right? So what's going to happen is you're going to get a lot of these smaller houses like I do. I pick up 2-3 houses at a time, but they're very little money out of pocket. And the ones I don't want, we're going to wholesale. But then all of a sudden, boom, you got an 8-unit with a bar. It's going to be generating ungodly amount of money. So you really got to be open-minded to all these things. And if you're not, you're just going to be like every other investor that comes to me and says, I cannot find a deal. That's what you have to do. And then that's why I'm glad you guys are on this call, just for the education of it. You got to embrace rejection, right? So I get turned down 95% of the time. I just laugh things off now. I mean, I've been in car sales all throughout the 2000s. I own my own cabinetry company where I did one call closes inside people's houses where I'm literally contracting people. And now I'm doing it with sellers, making it win-win. And I'm contracting them the same day. So you have to be confident enough to be doing these things. Are you going to fall on your face? Absolutely, you're going to. And if you don't, an investor tells you they never fall on their face, they've never taken chances, right? So you just be calculated in your risk, right? I mean, we are in the short-term rental business. It is more risky due to the inflation and loss of jobs and blah, blah, blah. The sky is falling. We have contingency plans for stuff like that. We could sell the property, right? We could rent it in a 30-day rental. We're not putting ourselves in these bad positions. We are consciously thinking about how we can get out of it. Lastly, I always shoot for seller financing first, right? It just takes confidence to ask for it. If you know you have a sub-2 deal with negative equity structure, you have to napkin underwrite first. Then you have partners, right? Where I'm going to bounce my ideas and they're going to come and correct me too. Be like, Frank, like Lupe did today. Frank, that's great. You're getting all these great contracts and all, but slow it down. How are we going to make this work? And you need that give and take with partners. So I think that's extremely Extremely important. The biggest thing with articles for agreement of deed or seller financing is show the seller how much money they can make on the interest payments. So it's extremely important. I have an amortization calculator that I show people. Listen, in 20 years, you're gonna make double the amount on this property with the interest you're gonna be making. You're the bank. Take advantage of that. I'm gonna be making my money from what I gotta pay you and what I have to pay, or I get the income in from an Airbnb. That's how I make my money. So that kind of concludes the presentation. I want to talk about some new deals we have in the works. Again, you're going to get a lot of these single family homes that are going to come across your desk, and you're going to pick them up with very little money or no money out of pocket, or use them as the bank, right? What the deal we have under contract is one that's an amazing deal. It's a 20 unit, 2-building, mixed unit bar and motel. It was in the same era as the Roxana Resort that I talked about before. It was built in the early 1900s. And this was on Hotel Row, it used to be called. It was originally called the Randolph Hotel, so we're going to change the name back to that. This other owner, oddly enough, was the brother of Richard, who owned Lakeview. Charles, I'm not going to say his last name, but they were basically brothers. They both own these same properties. Again, he put extensive amount of work into the structure of this building, piers and metal beams to make it where it's really cosmetic. And the same thing, I have to relocate a lot of these people that are in there now on, they're on subsidized housing. So we're gonna have to relocate a lot of these people. But once it's brought back, you're gonna see absolutely incredible building, but that's only the start of it. It's in the middle of a huge redevelopment project by the Village of Fox Lake. They're very pro-development, and they're putting in $12 million that they received from a bond. This is an amazing public works project that has an amphitheater, kids splash pad, walking trails. I mean, you name it. It's an amphitheater, a picnic patio. I mean, they're starting it this year, and it's already in a TIF district as well. If anyone's familiar with TIF districts, basically they're going to be giving us 20% of the purchase price and the remodeling costs, which it comes in the tune of around $400,000, and our budget is right around $400,000 to $500,000. So basically, our remodeling is covered. This is where it is in relation to all of our other properties: Lakeview, Lotus, Roxana. If you've been following me a lot, we've got about a dozen properties. They're large scale format properties where you could fit from 10 to 20 plus people in them. A couple of them are commercially zoned, like the Roxana Resort. We just picked up, Tiffany and Lupe and I, we just picked up the Sticky Marina. It's a 92 boat slip marina. We're dumping some capital in it to make more amenities for the guests there. Think of self-storage for your boat, right? That's what it is. It's very automated. Everything now uses a DACWA program, it's called, where it does all your contracts. It collects all of your revenue via credit cards. There's no more cash. Everything is very nice and streamlined. It's all automated. This property is smack dab in the middle of all of our properties. So when it comes to property management, we're there within a 25 to 35-minute drive. And we in-house do our own property management, from our messaging to 24-hour a day, 7 days a week maintenance people we have on staff. Our own cleaning staff we have that is basically there on our beck and call when our guests are going to be needing things. So I can't stress that enough. It's within our vicinity that we have total control over this. And that's important with boots on the ground, right? Having people there to do this. It's very difficult to do what we're doing at this scale remotely. So if you are interested in the Randolph and learning more, you could write this tiny URL down. That's the next webinar. It's gonna be next week. We're going to talk about that deal, or you could reach out to myself, Marco, Tiffany, or Lupe, and I'm going to put our contact info in the next slide. Let me move this thing out of the way here. Can you guys see that? And I'll post this as well in through my Facebook and social media, as well as I'll email everyone that's on this call to register for the next one. That's an absolutely amazing deal. Not just that, we've got 3 other ones that are coming up. So if you really want to be part of our team in education, learn on the job type training, you got to reach out to us. And here's our contact info.
So let me see if there's any questions out there. Okay, you guys answered the question. That's Joseph. All right, so Frank, are you opening up the questions if they have anybody out there has any questions or?
Yeah, absolutely. Let's get to it.
I see one coming in.
Okay, I'm gonna read the question to you, Frank. First question, what are the types of partnership you are looking for from Remy?
Yes, the majority of the deals that we structure are JV deals. So we're always looking for partners that could bring some superpower to the table, whether it's asset management, underwriting. Capital is easy to find if the deal is really sound. So we're looking for people, and we turn away a lot of people that really they just don't have it, right? So we want to make them very active in the role of a JV. We haven't done any syndications yet. I don't really feel there's a need for it now because we have a pretty strong network of investors that we work with and partners on a daily basis.
But I mean, if you find one and you have to make it a syndication, you will. And like I said, the people tonight, most of these deals are JVs. But if you haven't met Frank, you set up a Zoom call. You got to do an introduction, and then when a deal comes along, it's a JV. Anybody can invest. And then if you've had that networking call with him, if he does have a syndication, then you're definitely allowed to also invest in that. That's why networking is important. And just if you meet him here, it's good to get on with him and get to know him,
Yeah, absolutely.
build that relationship.
Okay, Frank, the next question is from Laura, and she asked how many visitors come to the area every year? Just a approximate number, if you know.
So you could probably Wikipedia it with chain of lakes visitors. I don't know the approximate numbers, but I do know that majority of the people, just like with New York and the Catskill Mountains, it's going to be about a 2-hour drive. So probably within a 90-mile radius of our area, I want to say it's probably close to 300,000 to 500,000 people come every season. The beautiful thing about some of these larger formatted properties is that it's not just your weekend getawayers. Like our property in the Lakeview, that's a motel. You're going to get a lot of people from the city. They just want to come in with their significant other, hang out for 4 days is about, or 4 nights, 3 days is about the average stay. For some of the larger properties, you're seeing more family get-togethers, right? Grandma's 75th birthday party, Christian retreats, women's retreats. Since we have properties also that are almost next door to each other, there's a lot of overflow. So you're seeing a lot more people with weddings. So the Johnsburg estate here, then we have the property next door that we're going to be releasing in the next couple months. And then with the Roxana, we just picked up the Rushmore retreat, which is about 10 people can stay in there. We get overflow from Roxana's wedding. So the answer to your question, you probably just Wikipedia it, but I'm going to guess between 300,000 to 500,000 people a season.
Thanks, Frank. And Josh is asking, what are the most common seller objections? What are your most successful counter or pitches or your pitch to the seller?
Thanks, Josh. Josh is a partner of mine in a few properties, notably the new marina we just picked up, 92 boat slip marina. That's what makes people different, right? Makes me different. I'm not the smartest guy in the world, right? I'm not the most articulate. My mom says I have a face for radio. Ha ha ha. You need to be able to interact with these people and overcome their objections. That's what makes a good trial attorney very good, is they already know what's coming at them and how you could fire off. So the number one objection with selling their house, right? I have a green, yellow, and red scale. And it's not more or less the objections, it's how they react to my questions. That's number one. Okay. So if I'm gonna ask them, like, what's your mortgage? If you get somebody that's immediately going to tell you what their mortgage is, texting you what a mortgage statement is, they're a green light. They're going to want to be very receptive and sell you that property. If they're like, what do I need to give the F for? Why is that pertinent to selling my house? Well, they're going to be a yellow light, right? Because they didn't hang up on you, but they're being a little bit standoffish, right? A red light would be just like, I don't want to deal with you. I don't want someone else. Click. I'm going to hang up. So that's the first thing I look for, is their interaction with you, and I'm feeling them out, right? Are they really serious about selling? Do they really have pain or urgency? Secondly, with, the way that the objections. So there's tons of objections. I gotta ask my wife. I gotta check with my lawyer. I gotta do that. The number one objection I cannot overcome, or very difficult to overcome, is I need money now to buy another house. Okay, so chances are that's their primary house and they need that cash to get another property. There's a couple different ways after I hear that. How can I structure that where it's a win-win, right? Ask them, how much money do you need out of this deal? let's say, for instance, they have $100,000 mortgage and they have 90% of it paid off. So they got 10,000 in equity, kind of like I did with Fred at Lake Geneva. Well, I said, well, Fred's like, I need the money to go get something else. I want to buy myself a boat. Cool. How much do you need? 30 grand. I did my napkin underwriting. I looked and saw if that actually would work with 30,000 what he was looking for. It actually worked based on what I'm thinking we could get for this property. So I overcame that objection of I need money now to get that. I always ask them, you know, what do you need it for? Is it buying another property? Is it health reasons they need it? Do they have to fix their camper? Like things like that. And then I show them, well, wouldn't you rather, if they say, I don't really need it, this is my secondary home, I really need the money I'm gonna put in the stock market, I'd be like, well, let me show you in an amortization calculator what you can make on the interest as opposed to putting that money in the bank. So I'm overcoming that objection of I'm just gonna take that money and save it. I'm gonna put it in a mattress. That specifically works for older people as well that have paid off houses, vacation homes, but they don't need that money, or high equity people, right? High equity properties are great to look for. Higher landlords is great to look for. Seniors, if you look at people 65 and older, those are people that don't really need this. Another objection, let me think here. I gotta ask my wife, and in the car industry, you'd always have this, all the parties included in this from the beginning. So I don't get that objection anymore. But a lot of times the newbies will be like, oh, he's got to ask his wife, or he's got to ask his husband. I've already keep these people in check. All, if it's especially an older person, I want to get the family involved, right? I want everyone on board because you're married to these people for many years, and everyone, you don't want any animosity. You want to make sure everyone's on the same page. I won't keep, I can keep going on and on, but Josh, if you got any more, definitely reach out to me.
Okay, Frank, and Taja has a couple of questions on the partnership. So she wants to know if your partners have different roles and just specific responsibilities.
Yeah, absolutely. So like Lupe helps out a lot with underwriting and investor relations, the same thing with Tiffany. We have some partners that are accountants, so they handle the bookkeeping, the day-to-day operations. We have people that are in general contracting, so they're going to handle that. So there's always something to do. Trust me, there's tons of stuff to do. I want to focus on acquisitions and getting the next deal structured, contracted, and pass it off to my partner. That's the power of partnerships. If the money is one thing, yes, everyone knows we need money for capital for properties, right? Everyone runs out of money. We need money, but we also need very smart people on our side, right? I want to be the dumbest person in the room, and I want to find partners that are smarter than me.
And I just want to echo on that because I think in a lot of our deals, we have the partners get involved, and it just depends on what is your strong point. So we have people with accounting background, like Frank talked about, and we turn over the books, so they'll take care of that. So really, you can bring your skill sets to the partnership, and that's what we want anyway. So we can, you know, kind of share that workload and the responsibility. Next question. Okay, Kathy asked, how do you underwrite the winter months? I'm used to multifamily in the South.
So I'll break it down to seasons, right? You have 4 summer peak seasons, 4 peak months, I'm sorry. The rest are your off season. So we're going to look at occupancy, right? In the first year, we're going to look at between 50 to 60% occupancy in the summer, 20 to 30% in the winter. That could change on the size of the building too. With bigger properties like this, we're probably going to go for larger occupancy in the summer because we know based on this area, we're going to get 80% occupancy. By year 2 and year 3, you're going to see those numbers go up with occupancy. As also our pricing too. We could slowly test the market a little more. If we see that we're not getting any results every week, we talk about this a couple times a week, constantly pulling the levers on what's working with price wise. And it's always about price and sometimes timing, right? Like right now it's Labor Day. Kids went back to school. We're going to be slow no matter what price we put on there. We're not just going to drop our pants to make good on that. We have to be conscious that, you know, we should be, you know, just wait it out. So there's different parts of the season. So it could be a little tricky, but based on experience and being here, you got to know your market. So a lot of investors that go to a different area, like I want to invest in Florida or in Tampa or wherever, you don't know that area. So stick in your backyard to begin with and really learn your market first, then move on to the next one and find partners that are in those areas that you can slowly do deals with. Jump in, get your feet wet, learn their process, learn if you jive and you can work well together. So to answer your question, yeah, it's mostly seasonality, summer and a peak season, and basically occupancy, right? Like in the beginning, start off with 50% for your peak season and slowly graduate up to 80.
Okay, and John Stanley asked, how do you figure out the best form of seller financing for each deal? Are there resources you use to educate yourself on the different ways to, doing seller financing?
So there's really only, in Illinois, there's only a couple ways. There's subject to mortgage, right? Where it's essentially you're not assuming their mortgage, you're taking over their mortgage by literally just going into their bank and getting their login information, their credentials, and they quit claim the deed to a trust that we set up. That's one way. Second way is an articles for agreement of deed. It could be a 1-page document. Ours are maybe like 15 pages. It's just simply an agreement, right? And a lot of people get caught up in the legalities of it. And is it one-sided? No, it's both-sided. And majority of the time, attorneys aren't involved in it. But again, I don't want to shark these people. I want it to be a win-win from the beginnings. We're going to be married to them for the next 5 to 20 years. So it's got to be very clear, layman's terms in there, the agreement, like what is the P&I payment? Well, who's responsible for paying the taxes and insurance? Who's responsible if something gets broken? Stuff like that. Is the property in a flood zone? So I want to be very clear on stuff like that. The third way is if you're buying land, right? Just strict land. Land contracts are really big in Wisconsin. I don't really use them a lot here in Illinois unless I'm buying land, but I do articles for that as well. So depending on where you are in the country, and I know like Texas, they're very against seller financing, so it's hard on the different ways you could do it. Same thing with wholesaling. So you have to be, you have to check your legalities with your attorney and find a very friendly attorney that's familiar with seller financing as well as a title company as well. It's very important. So your attorney has to be plugged in with a title company that will ensure these types of things. Hope that answers your question.
All right, and we have another question from Kathy. She says, I'm in Denver, Colorado. What are the chances of you acquiring properties in Colorado?
So we had a contract, a motel under contract with seller financing. So it's very seasonable as well. I thought Denver would be huge with skiing, and it is, but not as much as everyone really thinks. It is, if it's by a lake, it's very seasonal as well. I'm not against Denver, but some of their laws, from what I hear, are very old school. Like they won't change things. They're not very pro development when it comes to short-term rentals. So it really all comes down to your municipality, right? And what they allow and they don't allow. So you just got to, first and foremost, you got to check with them first, do they allow it? Like the motel that we were actually contracted with, they ran it illegally as a short-term rental for like 20 some years. Once they went to go to sell the property, a whole can of worms came out and they realized they were operating illegally and they got shut down. So you got to be really careful with stuff like that, the little ins and outs. So first and foremost, check your villages will allow it. I mean, we're running a business here. We're not running it like a mom and pop operation. You have to play by the rules.
Thanks. We have another question here. How do you figure out how to price the property per night stay? And how proactive are you in changing the rate depending on the elasticity of demand?
And that's the number one question with short-term rentals, hotels, right? Is how do you price it? So in the beginning, we used, airdna.co to give us a basis and basically like comping out a property, right? We're going to make a list of 5 to 20 properties. We're going to look at the calendar, take your time on every month, what the average rate is for all those, and then take your law of averages and go from there. As we've been doing this over the years, we're cornering this market. We're actually dictating the price now because any large scale Airbnbs in this general area are going to be owned by us. So we could kind of know already based in, us doing this for many years. So, and things do change. It's constantly, it's very, dynamic, right? We're changing levers, the peaks of the season, COVID outbreaks, elections, you name it. Yeah, you constantly have to be pulling levers and be super conservative with your underwriting on occupancy. Start off at 50% in the peak time, start off with 20 to 30 in the winter, and slowly go up. And then if you underwrote it correctly in the beginning, you got something to fall back on, right? Hope that answers your question.
Thanks, Frank. So circling back around to Laura's question, she was asking about the visitors that came out yearly to Channel Lakes, and it's Joe actually answered this. I guess he Wikipedia'd it. It's the Channel Lake draws about 30,000 on a weekend and up to 100,000 on holidays. We have another question here from Michelle. So one of your properties was a VA loan at 2.5% that was a deed transfer and not a VA loan assumption. The seller is still carrying the note.
Correct. Yeah, with a subject to mortgage, the mortgage stays in their name. And if you're new to investing, there's two parts to a property, right? There's the mortgage and the deed. So the deed is always in your name. Usually the bank will hold it. So all we're doing is we're transferring that deed over to a trust. So when that property is paid off, basically we get that deed, but we control that. So we want to go sell that property. We have the deed from the seller, and the mortgage always stays in that person's name.
All right, next question here from Tanja. You mentioned Pace Morby. Did you take his course or a different creative financing course, or did you learn through trial and error?
So, I did take some of the courses. I started doing creative financing even before I knew there was a term for it. One of my first properties I ever did, because I had no credit at 19 years old, I had very little money, is I structured a single family home in Itasca, Illinois by O'Hare Airport on terms. Actually, the seller came to me and wanted to sell it to me because he couldn't get rid of the property. It was so dilapidated that he couldn't sell it on that market. And at that time, unless their house was mint, you're not going to sell it. That was a while ago. That was probably into early 2000s. So I have taken those courses, and honestly, they're great for somebody that's just getting started. By that time, 8-10 years ago, I pretty much have already done it, and I didn't stick with it all the way. My biggest mentor, and I can't stress this enough, is attorneys, right? I've got a cousin who's an attorney. I've got an attorney who might be on the call now that I learned tremendous amounts. Vincent Incomparo is his name, and he's out of Elmhurst, Illinois, if you want to Google him. If you're in Illinois or in the Midwest, he absolutely could help you. I'm going to shout out to him. I learned tons and tons of the ins and outs with title companies, with structuring contracts, with how to structure deals in general, right? Dealing with people. And my background is in sales and marketing to begin with. I just coupled all these things with great mentors, with sales techniques, with closing, and get rid of my limited beliefs, and actually just asking for it. That's really the secret of it. It's nothing magical about this. You got to be aggressive. You got to be consistent. It's got to be a win-win deal. And you got to have mentors.
Thanks, Frank. We have another question here from Allison. Can you dive a little deeper into articles for agreement of deed and any other contracts used for seller financing?
So I'd have to send it to you. So if you want to reach out to me, the agreement that we use, but you don't want to just get something off the internet, because sometimes stuff could just be thrown out of court if it's too one-sided, right? The judge will overrule and be like, this contract's way one-sided, and it won't, they won't really respect it. So you got to go to an attorney, have them draft it, whether I give it to you or not. I'm not an attorney. Let me stress that. I'm not giving legal advice or any accounting advice, right? So this is all on you. I would highly recommend to reach out to an attorney to do it. But that's majority of what we use is either just a purchase contract and saying that it's subject to mortgage, and an articles for agreement of deed, basically laying out the agreement on how much we're paying them and all the little intricacies.
Thanks. We have just a few more questions, Frank. From Andrew here. Have you ever encountered a situation where a debt and a mortgage is accelerated when you structured a subject to? If so, how do you work around that situation? Do you avoid recording a deed?
Yeah, we don't record the deed. So couple things is, will it happen? Absolutely. In real estate, whatever can happen will happen, right? So you just gotta be prepared for it. So far, it hasn't happened. But if that does happen, we could get out of the deal by just either, you gotta have contingency plans, right? Selling the property, refinancing the property, or simply walking away and giving the property back to that seller. This is the reality of real estate, right? I mean, if you're an investor, you're gonna have to roll with these punches. If you're in stocks, you're gonna have to roll with the downturn of the market. So if this stuff scares you, like I said, don't do it. Stay away from it. Stick to your 9 to 5. If you're going to take some chances and do things like I'm doing, though, it's going to propel your game to the next level. Now, I can't stress that enough. I'm not giving advice on this type of, if you want to do this, though, it will pay off for you. But yes, it will happen sooner or later to every investor if they do enough deals.
All right, so this actually is a similar question. Are you concerned with the due on sale clause on some mortgages?
There's always concern, but be
Yeah.
prepared for, right? Have contingencies.
Definitely. All right, next question here. How does your DTS campaign work? Text first, then follow up by phone call, emails?
So the texting is just to get them to engage with you. Do you want to sell your property? Yes or no? Yes, I do. Great. Can I call you right now? Not tomorrow, not next week, not have my partner call you. Can I call you right now? And you have to either be manually looking through these. If you're a beginner, do not use VAs because there's a lack in time. You're not taking it seriously. You have to learn in the beginning to do it yourself. You can't rely on other people. You got to get your feet wet. You got to hustle. Once you get established enough where you're scaling, yes, you can start bringing those people in and create a system. Get them off that text. Do you want to sell your property? Yes or no? Yes, I want to sell it. Great. Can I call you right now? Yes. Call them up and say, why do you want to sell that property? And you're listening to their engagement, right? Green, yellow, red. If they're saying, I need to sell this property immediately, I'm going through a divorce and I got to hide my assets, you probably don't want to work with that person, right? Just because it sounds kind of fishy. So right away, no, this isn't going to work. But if they say, I need my money right now because my son is sick and we can't pay the deductibles and we need to sell this house immediately, we're going to move in with my mother. They've got real pain there, right? And I'm going to make it a super win-win for both of us. That's their pain, number one. Are they answering all my questions, honestly, and with no real friction, right? The green, yellow, red. So they're green. I'm going to say then, why do you want to sell your property? They give me that reason. And then I'm going to say, in my head, how can I structure this where it's a win-win? They tell me, okay, tell me about, do you have a mortgage? Are you current on your mortgage? And I've got a list of qualification questions, about a dozen. It's not more or less the questions, how truthful they are with them, but also, is that going to fit within my purchase strategy? So number one, I always go seller direct and I ask for them to finance the property, whether it's subject to mortgage or articles for agreement. So if they say there's no mortgage on the property, it's my second home, I've got pain because my son is sick and we got to sell this and we need the money for it. I say, okay, how much money do you need for this property? And you're going to move in with them. Oh, we need all the money. Well, I'm going to look and see, well, that's not a good fit for us because, I'm not going to spend $1 million on your property if I can't really make it. So that we wouldn't be a good fit with that. But if they say, listen, I only need 20,000 to buy a camper and we're to live frugally until we get past this hard part in our life. Okay, so you're telling me you need 20,000. We can do a subject to mortgage. So in my head, I'm structuring the deal based on a win-win and as least money out of my pocket and my partner's pockets as possible. And that's how I kind of step it. So it's kind of hard to teach it unless it's a case-by-case basis. So I see pain coming across my desk. I ask, why do they want to sell? And I take all these puzzle pieces and I put them together and I structure it, right? Can I do a subject to? Can I do articles for agreement? Can I do a land contract? Can we do a wrap where they have a mortgage and we're going to wrap an articles around that, right? We're not going to record the deed. We're going to have the attorney hold the deed. So there's a lot of different ways we could do it. And I could go on and on about it. It really comes down to a case-by-case basis. And that's what's hard to teach. You really need a mentor on every single deal is going to be a little bit different.
Definitely. We only have 3 last questions here. Can you please talk about the development side of a deal like the TIF example?
TIF is pretty new to me. I've never really done government, public-private type deals like this. So I'm learning as we go. TIF essentially, from what I'm understanding, is taxes are raised for the development, for the better of man, right? So we could redevelop these areas. Right now, that one building like the Blueberry is, it needs a lot of love, right? There's people in there that are either seniors or people with mental disabilities, or they're, subsidized housing. They need to be moved and the area needs to be regenerated. In turn, we're going to put money, they're going to give us money to increase the property. And then over time, they're going to increase our taxes to pay that back off.
All right, thanks. Last couple questions. Do they give finance in advance even if your property is only remodeling? So that was a piggyback off the TIF question.
I'm sorry, can you repeat that? You're kind of breaking.
Do
up.
they give financing in advance, even if your property is only remodeling? So it was actually a piggyback off the TIF question, whether or not they're giving these funds in advance.
They are not. It's over the course of time. It could be either in tax incentives or straight cash up, but every deal is a little different from what I understand. These types of deals, especially banks don't like them, right? Redevelopment deals, especially with hotels or short-term rentals. So this one, we're doing another seller financing deal where we're going to be working with the seller as we're in construction. We're going to get a rent roll going and then produce it to the bank. So again, not an easy deal, not a beginner deal by any means. You got to be pretty advanced to be doing this kind of stuff. That's why I think it's highly, I can't recommend this enough, to get in with a team that's currently doing it. Don't try and reinvent the wheel and doing this all on your own. You know, you'll fail and it could be monopoly, game over. So get with a team like someone like us to help step you through it.
All right, last question here. What was the guy's name in Illinois again? I believe you're referencing their attorneys at the time.
Vince Incomparo. He's out of Elmhurst, Illinois. All
right, and that actually wraps up all of our questions this evening. Thank you so much, Frank.
Absolutely, guys. If you got any questions, please write down my email. It's Frank, FRANK, @lamcoinvestments.com. Or you can shoot me a text, 331-551-1131. And let's get on a call. Let's get you educated.
Frank, we actually had one last question just roll in from Laurel. If it's on the MLS, how do you approach the seller?
So it depends if they want to talk to you or not. Some people, let's say, talk to my realtor. And I love realtors. They bring me a lot of deals, but 95% of them do not know how to structure creative financing deals or present it properly to the seller, right? So I try and be respectful of the realtors and say, listen, I really like a meeting with the seller. And if you don't know who I am, I'll send you my my bio with my, what all the properties are and how I do them. And you have a level of trust with that broker as well to introduce you to that seller. But I'd say 60 to 70% of the time, I'm going to be able to structure the deal with the realtor and the seller as a meeting. But if they're on the MLS, you got to respect the realtor's, time.
Definitely. So a few other folks just asked if they can get your contact information again. Is there any way to put it back on the screen and maybe they can take a screenshot or?
Let's see. Here we go. I'll put it in the chat, everybody.
Okay, perfect. All right, and it looks like that actually concludes our Q&A.
Awesome. Well, thank you so much, Tiffany, Lupe, and thanks for everyone for showing up and taking time out of your evening. And we look forward to seeing you soon.
Thank you. Thank you for coming, everybody.
Thank you.
Bye-bye.
Have a good evening.